Hello, everybody. It's December 2nd, 1 p.m. Central European Time. Today's guest is Markus Aumer with Round2 Capital. Looking forward to talking with him. This will be our last show. We're going to do it at 1 p.m. Our next shows will be at 6 p.m. So the next show will be on December 6th at 6 p.m. Central European Time, and will also be available that way on North American hours as well. Real quickly, before I introduce our guest here, Markus Aumer, who I'm looking forward to speaking with Round2 Capital, just wanted to take a moment and share some things that I thought were kind of interesting in the news, just kind of up and down, and it kind of fits in with what we're talking about right now. So there was one article here, Winter is Coming. And I thought this was really interesting because this is one of those doom and gloom renters. Hold on. How is let's ask the audience here. How's the sound? So we have this doom and gloom article here about the industry, technology, and these are all really mature companies, post scale up. But it's interesting. They talk about Meta, which is formerly Facebook, and so they're doing big layoffs here. Of course, they did a big bet on I don't know what it is. Oh, reality. I don't know what they call it, virtual reality stuff. Twitter, of course, we all know about the Twitter saga. Really interesting. Elon Musk bought the company for $44 billion. Be interesting to see whether that was a good bet or a bad bet. You know, Elon's really smart guy, very successful person. I don't want to root against him, but it seems like if Twitter was going to have made money, there was a lot of people that worked on that for quite a few years, but we'll see how he makes out. Salesforce, cash cow, but where does the growth come from in the future? So maybe that's a challenging environment for them. Microsoft is a company that really succeeded well in transforming itself from a pure player software company to more of a cloud player in the 90s and 2000s. I'm not too worried for them. Netflix in the content business. Tough business to be in, especially you have YouTube content, which, you know, a lot of their makers make for free. So we'll see how they're able to make out. I kind of worry about them. I guess all these companies I have mixed feelings about whether they'll be successful or not, or be able to turn things around or not. One thing I'm certain of is a lot of these people that are coming up or leaving these industries are going to be fine. They're going to go on and start other startups and be part of the next generation of technology. And that's kind of what I wanted to talk about too, because on Deal Room, they had a really fascinating report that they put together, and I really recommend Deal Room. I think and so they're talking about, which doesn't seem to want to come up here, the next generation of tech and ecosystems. So this report is too long to go into deep depth. But I think what they're looking at is an ecosystem. What is an ecosystem comprised of? Well, you need talent, you need innovation, you need enablers and capital. And what we're seeing now is that all this Silicon Valley was the first place to really bring this together. And now this is spread to the four corner of the globes. And I think what's interesting about this is that the one thing they mixed is you need culture here as well. So you need a culture of people that look at problems the same way. And that's really the unique things about technology is that we have a common tech problem-solving culture around the world now, which is really unique. And of course, which is really good because we're facing global problems as well. So we need people that are like-minded, that feel empowered, that share the same approach, kind of lean methodology to putting things in place, good processes, and overcoming things. So I think the one thing that there is, of course, it's really hard to measure culture, but we have this worldwide culture that's available now. And so then I think what's interesting now is that everywhere around the world, we're seeing value being built. So it could be second tier cities in India. Montpellier, where I live, is kind of a second tier city in France, has a huge startup system. So this startup ecosystem, as long as it keeps growing, as long as we're feeding it young startups with great innovative ideas, which may not become unicorns, but they'll go on maybe through M&A to become parts of other companies, or they'll give people their first experience. This is all positive contributions. So I thought this was really interesting. And once ecosystems get going, they're very difficult to destroy, but not impossible. So I just thought that was really interesting. I highly recommend you read the Steel Room report. Super fascinating. Um, and they talk about what are the next cities coming up. Who's likely to have the most growth and why. And so I think this is just absolutely fascinating. And then there's like these little boutique countries and regions or cities where, for no reason, it's hard to say exactly why, but they seem to just lead the world on innovation. So one other thing I want to point out about this is something that I think is kind of misunderstood, which is, of course, we talk about technology, and they talk about the important technologies coming up, that these things that happen, AI, the cloud, mobile, the web, personal computing, all these trends that led to things. These are all technology trends, and as important as they are, I don't think we should underestimate something like reoccurring revenue, what the SaaS business model did for innovation, to move investing in software from CapEx to OpEx, and how important that was, and how that's going to carry over into other aspects of our economy as we develop. Okay, that's enough for me preaching today. I get preachy sometimes. Let me pull in my guest here. Oh, Markus.
Hey Steve, how are you?
Hi. Okay, hold on. Let me just double check because sometimes we have sound problems. It looks like my sound is good. Let me make sure. How is Markus's Austria sound? Let's see if we can get someone just to make sure we aren't talking into a blind. Oh yes, we've got good sound. I'm starting to figure out all the technical challenge.
Perfect.
They say they can hear your lovely voice. That's quite a compliment. Listen, I thought it was interesting, those two pieces of content. They're kind of two sides of a coin. And what I liked about that is it kind of gave us a chance to step into. We can't see him though. Oh, I always forget something. How's that? That should be better. Now that they can see you and they can see your lovely face to go with your lovely voice.
So,
In a lovely, very simple white room, not very ostentatious
no,
for.
we just moved into a new office space. Um,
Okay,
so we're still decorating here. Unfortunately,
good.
yeah.
You're still decorating. Well, good. Don't spend money needlessly right now. Everyone's saying hold on to your capital. So listen, before we get started, why don't you tell us a little bit about yourself and your role at Round2 Capital Partners?
Yeah. Um, yeah, I started out with Round2 Capital back in 2018. So the company was founded in 2017. I joined them back then as an intern. When working with the partner team and management team, for 5 years. Currently in the role of an investment manager. We just recently closed our second fund, which brought the company's assets under management under over 100 million. And what's the interesting part about Round2 is that we were the first revenue-based finance provider in Europe. So we brought this different angle to how to finance SaaS companies, especially B2B SaaS companies in Europe, to the market. I think, as most of you already know, the market has grown rapidly since then. New players entering the market, like CapChase, Uncapped. And that was also very good for us because in the beginning it was a lot of educating the market from our side. What is this new funding methodology? Never heard about it, and we had to answer a lot of questions. And competition for us was really great during over the past 2-3 years, as there was actually like everyone was educating the market, and now I think revenue-based finance has actually become a very common method to fund software as a service companies, and I think this will even accelerate further in the next couple of years.
Yeah, I actually didn't know anything about this space. I just discovered this space at SaaStock
Oh, really?
in Dublin. So I didn't know anything about this, and so you and a CEO of another revenue financing company were my kind of first introduction into this space. So I didn't know about this, and I think that's what kind of interested me, is that there seems to be a growing appetite and supply for alternative models for financing growth.
Yes, I think so. Especially like what's the beauty about software as a service business models is that they have recurring revenues. And if we look back in history, so bank loans were built for the tangible economy, for industrial economy. You have something you can use as a visible and physical collateral. And now banks are not very able to lend against intangibles. And this is where the beauty about software as a service business models with recurring revenues, because recurring revenues are actually more secure than, in our opinion at least, than tangible assets, because they're actually already monetized. And so we started out to lend against intangibles, which is called term revenue-based finance. And I think it's a very, very beautiful model, because now companies without any assets, or let's say very few assets, can actually get funded with loans, or get access to a new funding approach which don't dilute them. And there is also, it's just something. It brings a new angle to how to fund growth or software companies besides equity.
Yeah, I think it's really interesting. If having worked with a lot of different founders are always adverse to the idea of giving up equity, because oftentimes that's synonymous with control. And as soon as you do that, there's give and take with the investors, and it can be really challenging. And then at the same time, the reoccurring revenue model, it just keeps giving and giving and giving to our industry. So it's really interesting. Not only does it help you acquire, I mentioned that in the preface to what our conversation, helps people you acquire the business, because you're moving from CapEx to OpEx, but also now, I would be, like you said, less risk adverse to investing in a SaaS company with a recurring revenue model than someone who has more of a traditional revenue model where it's feast or famine, and you go away. So how much money, can you repeat how much money you guys have under advisement? Is it like 100 million?
Yeah, it's 115 million, yeah.
150. And are you raising more? Or are you actively searching out more?
We're still raising. So we just had the first closing on our second fund. So the vehicle overall will be 100 million. We just closed at 62 million.
Right.
And we are still raising. So we have now had the pleasure to work with the first fund with about 25 companies. We now scale our efforts to support more and more founders throughout Europe to grow without dilution.
Okay. And what about the typical companies that you engage with? Are these companies that are in the scale-up phase, so they're really looking to roll out and drive growth at a much larger scale, or can these be smaller companies as well?
So I think there are different ways how you can structure a revenue-based loan product. How we designed the product is that it perfectly fits for companies with between 5 to 50 million in ARR. The minimum ARR level for us is 3 million. But we can also go up to, if companies have like 20, 30, or 40 million. It always just depends on how much funding they require, because like typical ticket size for us with a revenue-based loan is around 2 to 10 million. So we start at a minimum for us is $1 million ticket size, but we can scale with the companies. And I think that's also the beauty about it, is that we start out to fund a small amount of the ARR. And as the company grows and the ARR increases, we can increase the revenue-based loan. So we can constantly help the company to accelerate their growth,
So it's almost like a revenue-based loan line of credit where you can just call on it, and as long as things are going well, you can go back to the well.
Yes. It's an increasing line, but a line is always means like you can draw down as you like. We rather say, okay, let's start out with, let's say, a 2 million ticket, and everything goes well. We just see, okay, how everything goes. Maybe you need a little bit more, so we can also increase it then to 4 million, 5 million, and so on.
So companies that you're working with, by the time they get to you, do they have a CFO or can they be pre-CFO stage?
I think if you look around this where we start out at 3 million AOR, most
Hmm.
companies are either currently in the phase of looking for a CFO or they already
Yeah.
have a CFO.
And their financials, are financials at your level, are they pretty homogenous? Are you able to clearly understand their churn, their revenue, and all these other things? Because one thing I've been noticing, for example, I've been following a guy who works a lot on profit and loss statements for how to organize those for SaaS companies, and he runs a whole kind of academy around that. And so is it very clear and understandable most of the financial statements you guys receive by the time they get to you?
Yes. It depends, I think is the right answer. So if you just look at the financial statements, you get from like the annual financial statements. I think
Mhm.
our system is currently not fully adapted to software as a service companies to really reflect this in their numbers. But
Mhm.
most companies at this stage already have actually found a good way to track their numbers, which also helps us a lot. But sure, it's for us, it's a lot digging into the numbers, understanding what is really churn, was actually just people who moved or customers who moved to a different tier. Also, what was the net retention rate here, and to fully understand that, to understand where is the growth really coming from, how the unit economics structured. It's very varying from company to company, as also the products are different, the sales models are different, pricing models vary. So I think every company is very, very unique in this aspect.
Right. Oh, that's interesting. Yeah, it's such an interesting space, and are there you'll definitely know this space better. Are there other alternatives to financing that you've seen besides financing future revenue that are coming up that you've noticed on your radar at all? Maybe you could help us understand this space a little bit better.
So you mean on the debt side or in general?
Just, I've always seen people, for equity, you can give up part of your company for equity, and now I've learned about this revenue model. Are there other financing models that are coming up that you're seeing that are more active with the change of the economy?
Not that I would be that much aware of.
Okay.
I was like, especially in the software sector. I think what we also witnessed that I was actually also surprised, like you were at SaaS Stock, to see how present revenue-based finance has become in this environment. Because like thinking back when I started out with Round2 Capital back in 2018, no one knew about revenue-based finance. Everyone was like, okay, is it like factoring? Is it like mezzanine? Everyone tried to fit it somehow in their in some bucket, but it's actually a
Right.
unique way to fund software as a service companies.
Yeah, that's kind of how the human brain works. The first thing we do is look for something to compare something existing with that we know. That's a no thing. It's kind of the simplest way to understand a thing. But yeah, it really is a new model, and I think it's exciting because it's growing up everywhere all at once. How quickly are you able to turn around terms and make a decision? Because that was a lot of the companies. That's what they're promising is the ability to turn around and get financing to the partner really quickly in like 48 or 72 hours. And I thought that turnaround time maybe sounds like best practices or when everything goes perfectly, but it's still very impressive to think that it might be under a week or something like that.
Yes, and I'm not sure how good the due diligence is at this point. And so for us, it takes between 4 to 6 weeks to
Yeah.
from first contact to closing, which I think is still very, very fast, especially if you compare it to equity transactions. And so, but
It takes me 3 months to buy a house, so I consider that
yeah,
pretty fast. So
yeah, and I think it takes thorough due diligence, like especially if you talk to companies with 3 million plus in revenue. Those are quite complex companies, often having subsidiaries in different countries, having 50 plus to 100, 150 employees already. There's, I think, a lot of things already involved and a certain degree of complexity you cannot automate as of today, in my opinion. And so it just takes some time. And also, if you then have to structure the product in a way that is tailored really to the needs of the company, I think it takes a little bit more time to have a thorough due diligence there. What might make sense, and this is also, I think, how this really quick deploying or like assessing companies work, is like they start to invest in companies that have maybe 100,000 in ARR or 500,000, and they do very small tickets, and they just deploy capital to, I don't know, like 1,000 companies, and more like a VC, and hope that maybe 10% of them succeed somehow and make up for the return of the others, and have really like this broad and diverse distribution. We rather do larger tickets with a more thorough due diligence and work with less companies, because we're also more actively involved with those companies.
Yeah. Yeah, quality. I think especially given where the market's at right now, a flight to quality isn't a bad idea.
Yes, and I also think this is also very interesting. You asked me also, it's also like what has changed for us in the past year, and how we look at companies and everything. And the interesting thing is like not a lot, to be honest.
Not a lot. That's funny.
Because for us, like we always, since we started out and how we designed the product, we're always looking at B2B software as a service companies with a really crucial product for the customers. So something you don't throw out of the window just because you can substitute it so that easily. So those are very sticker products. And those also, and the other part is like that's one product. And at the same time, we don't finance cases with 100-200% burn. We rather look at companies that are preferably bootstrapped and also around break even, or at least have a clear pathway to break even. So current turmoil in the market is actually not a big issue for us and also our portfolio and our funding approach, because those are solid companies.
Yeah, it's really interesting because everyone I talk to in the industry who's on the investor side says that they're looking for companies that are growing more responsibly, and a lot of these companies have bootstrapped, and it seems like the reaction to a lot of people who are starting SaaSes is like, we've just got to be more autonomous and do more with less, and it's really interesting time to see what's happening in the market. And I think it's going to be interesting, the startups that are starting right now. It's going to be interesting to see their DNA in a few years, because I think in some ways it's never been easier to start a company from a technological standpoint, but also the amount of skills that you need to have pretty good mastery over, pretty impressive as well. But should be things. So not too much has changed. Did you notice any big changes? Any big? You were at SaaS Talk. That's where we met. Did you notice any big changes there? How people were communicating, how people were talking, and how people were positioning?
So I think it was a lot about the impact of the current year. So COVID, now the war in Ukraine, energy crisis, and also how this impacted also the equity market, and how costs for equity increased a lot. So so that is also, I think it was a lot I took from SaaStag, is the people were more concerned about like, how do I get actually funding for the next couple of months? So can I somehow extend my runway? Can I get to profitability to really get through this current phase? I think that is a lot what has changed, and has also what was very interesting to see, because that brings a lot of people to look for different funding approaches.
Right. That's the thing is also when you talk with founders, when you take investor money for a round of equity in your company, it's a full-time job. I mean, often as a founder, you want to be working on sales and marketing and other strategic initiatives. And then at the same time, you're trying to work with investors and line up your financing. That's critical that you can just continue operations. And a lot of times they'll tell you that's like a full-time and like not like an 8-hour job, a full-time like 10-hour a day job. And so that's a lot of resources to get to. So if you have revenue and you can use that to build your business and you've got that, you can extend your runway or not have to be so involved with investors. That's very advantageous. I think the other thing I noticed that people kept coming up as one of the things people were talking about, customer acquisition costs too. And that customer acquisition costs continued to go up and up and up. And I think that's because of more competition in the marketplace. And at the same time, we have customers and our prospects are more and more, they're informing themselves so that by the time they get to your website, they've actually made 80-90% of the journey of becoming your customer, and they're just looking for confirmation about things that they've read or assumed about you. But customer acquisition cost seems to be a big thing, and people really laser focused on how can we acquire customers with the fewest resources possible. That seemed to be one recurring conversation that just came up over and over and over again. Are you active in which regions are you guys active in?
So we all over Europe. For now, we have invested in 8 jurisdictions, so we have a strong focus on the DACH and Nordics region. But we've also done investments in France and the UK. Also this year, we did our first investment in the Netherlands. So, but we're expanding, and we also opportunistically enter new markets in Europe.
And will you expand outward from there? Are you planning on being active in North America and in Asia, or are you going to stay with Europe?
So for now, for the second fund, we just closed it 2 months ago, and this will be now deployed in Europe. But let's see what the future brings.
Apparently, quick, want out your hot take on this. Apparently, Morgan Stanley loaned Elon Musk a good chunk of the $44 billion he needed to buy Twitter. Is that a good bet or a bad bet by Morgan Stanley?
That's
I won't tweet this. Okay, I won't tweet this.
That's a very tricky question. I think it's the same as always. Like if you look at the fundamentals, I think Twitter has a lot of work to do. Apparently, like that is also what Elon Musk thinks. Asking people to work long hours and go hard or go home. So it will turn out like in the end. Honestly, you just hope for Morgan Stanley that they priced their risk return profile correctly. But always, let's see how this turns out.
Okay, if it was your $44 billion, would you put it in at Twitter?
So it's not a SaaS company.
It's not a SaaS company. Okay, it's a moot question.
Yes.
Okay, that's fine. It's an interesting thing. It's really interesting. I mean, I think when I look at the marketplace, like I look at bets like Twitter, and also there's another company that I follow. I really like this company a lot, Twilio. And Twilio went public, I think, back in 2015. And I'm like, today, would Twilio be able to go public? Don't think so. Not as favorable terms in any case. And what's cool about it is that they did go public, and a lot of people that made money there have gone on to start other companies. So in a way, it all feeds back into the tech ecosystem in a way.
Yeah.
What about corporate and social responsibility? Now, you guys aren't communists. You're capitalists. You're here to make money. But is that part of your... I mean, do you guys take a view or a stand on that, or what's the? Because next week, the reason why I'm asking you this is on December 6th, we're having Rune the Thiel with Rockstart, which they've been very successful in doing startups that are able to do impactful innovation, and so I wanted to see what your take, if this was something you guys were interested in.
No, I think it's very important. This is also something we take serious in regards that often we're the first external funding partners for the companies we come in, or when we come in. And what is also part of our due diligence is we have created an ESG framework to walk them through, to make them aware of certain areas they should be considering as they grow the company as well. I understand that it's hard if you just grow like from 0 MRR to 100,000 MRR. It's a lot of work, and you focus on the product and you just try to get in your first customers and everything. But as soon as you have reached a certain stage and you can actually afford to have the resources in the company, that you say, okay, that's more than a project. That's actually a real company I'm building here. We try to educate the entrepreneurs here and say, okay, listen, your product is fantastic, but please consider also those ESG factors. And also we give them a guideline on, okay, look at those areas. Have you already done anything in those areas? And we once a year evaluate together with them whether they made any improvements, where we can work together with them on those issues, or I wouldn't call it issues, but at least challenges, and where they say, okay, we can have some impact here. So that's definitely something that's very important in the growth stage, and that was also something we take very seriously.
Yeah, I thought that was going back to Twitter. I'm not sure that this is a good thing for us to bring up, but it was interesting after he bought the company, seeing photos of people sleeping in their offices. And it's kind of cute, right? It's kind of funny, but something to understand. I don't know if you've never worked in the United States or another country that you're aware of this, but in the United States, a lot of people who do have the possibility to take vacation don't take vacation because they're worried about how they'll be perceived by their peers, or that they even could be fired for taking vacation. So I think work culture is great, and but it's also concerning when you see photos of people sleeping. And Ray Dalio, who's a famous American billionaire, came out and said that the work ethic of Europeans isn't as high as other countries, and he's already a billionaire. I think he's made good money off of Europe. So
but I think it's all about quality over quantity. So you having like great, efficient work hours, I think it's fantastic. At the same time, you need some time off to recharge your batteries. You need also to get out in the world. You need to explore, to get like exposed to different views, different opinions. Also cultures, because I think that helps you in the end to put more effort and quality into the work and working hours you have, rather than trying to work 100 hours a week, and then you're just like, okay, your brain is just gone, numb, and actually like the work you do there in 10 hours you actually could have done if you would have just taking the time off to relax.
Yeah. And also, I mean, we talk about work, but CEOs can't forget they need to just be having regular conversations with their customers. Happy customers, unhappy customers. I think the most successful companies I see, their CEO always has the pulse of sales and marketing just by having conversations with customers. And that is work. But too often, that's the kind of work that gets lost in the shuffle because there's so many other things that are so demanding. Markus, where are you based?
We're based in Vienna.
That's what I thought. Okay, so you're in Austria. And one of the things I wanted to touch on is Europe, across Europe, in the report I was showing you earlier. But of course, there's tech ecosystems going across Europe, across everywhere. What's happening in Vienna? What's happening in Austria? How are things developing?
So I think there's a lot happening. So the ecosystem here is evolving very good, especially the past couple of years. There are great organizations like Austrian startups who try to foster entrepreneurship already in schools, and then also throughout universities, to really bring this, you call in the beginning, global problem solving culture already in the minds of the people at a very young age, and try to foster the spirit across the country. But this takes time to develop. But also there now you have seen in the past 2 years there were the first unicorns in Austria with Go Student and Bitpanda. And there's a lot of things happening here. I think a lot of talent is coming to Vienna. Vienna is one of the most livable cities in the world, which I just can say it's true. Like I'm originally from Germany, having lived in Hong Kong, Cape Town, and also in Zurich. I just think like Vienna is amazing, and the quality of living you get here. And I think this is bringing more and more people to the city. It has about 2 million inhabitants, and also Austria in general, they have this very strong school system, education system. And there are more and more people coming up with trying to solve problems and building companies, also regulatory. There has been some changes, so it's easier to found a company. And there's a lot of support here also from the government side. So you get there are many opportunities to get grants to start your company. So I think the Austrian ecosystem is evolving a lot, and we also see from our side as an investor, we see more and more opportunities here in Austria where companies, software as a service companies especially, grow to 3, 5, sometimes even above 10 million in ARR. So it's a very interesting environment currently.
I think we were talking about flight to quality, and so investors are going towards quality companies. But it's the same thing now that there's more and more remote workers. I think like it's really interesting time to start a company. Like a lot of companies are saying, okay, we're mostly remote company, and then they can go hire top talent. So if you're an Austrian company and maybe you speak English, but English isn't your first language, you can go find an English marketer who can work remotely and help your company grow faster. So I think there's going to be a lot of disruptive things that happen on the growth side. You mentioned in schools they're teaching entrepreneurship. At what levels is that happening? At what ages is that starting at?
So actually, very very young. There's actually also university for children. I think kids around 5, 6 years old.
Yeah.
So at a very young age.
That's amazing. In the U.S., we start a lemonade stand when we're little kids, and we sell lemonade.
Yeah.
That's like kind of like a tradition how we learn about capitalism. So that's great.
It's capitalism on the one hand side, but it's also problem solving on the other. If you have a person who is thirsty and is fancying a lemonade,
yeah,
it's just, I think it's a great way to teach children. If you are able to solve a problem and for other people, then it's a great thing. And if you can make a living out of it, it's even better. And if you're able to scale this almost unlimited because you have really great unit economics, even better. And I think if you get this understanding early on how you can solve problems, and by solving problems you can create value for others, I think that's a very very great thing.
Yeah, that's interesting. That's great that they're able to integrate that at the school level and figure out how to do that. There's really interesting. In France we have French Tech, which is kind of and the French government uses that to boost the technology sector, and they're very active. And Austria, is there the equivalent, the Austrian equivalent?
I don't know French Tech, to be honest, but I would say here it's similar to AWS, not to confuse with Amazon Web Services. But yes, so they support a lot of companies here, and like they give out this grants, and they have a very supportive ecosystem, created a very supportive ecosystem over the past couple of years. Yeah. Also on more regional levels, there are also like states also have programs to foster entrepreneurship and support the startup environment.
So Austria is kind of a federal country. There's the different states
Yes.
that break out, like Germany.
Correct.
But you also have different programs at the state level. Okay. Well, listen, I think it's really interesting. Any of our audience out there interested in alternative revenue models, I recommend that you go take a look at Round2 Capital Partners. Markus Aumer here, who is on LinkedIn, would be happy to tell you about it. So if you have any questions, thank you so much for being our guest today. I think it's really interesting because this is part of the development of this whole tech SaaS ecosystem. Is that the more financing there is out there, the more different things out here, and I think this puts the onus even more on people growing responsibly. And what I like about this is it also kind of puts on the investors to be more responsible. I think some of the tech implosions we've had from the .com and even 2009 were sometimes the investors being too greedy and investing in companies with, shady unit economics, for lack of a better term. And I think this is going to put the onus on them of being more responsible and trying to grow their own portfolios more responsibly, and not just throwing money at the problem. Like you were saying, just saying, hey, 10% of our companies are going to make better money. We don't care which ones we invest in after that. I don't think that kind of shotgun strategy is necessarily good for them or good for the market. I like what you guys are doing. Thank you so much, Markus.
Yeah, thank you for having me, Steve. Pleasure talking to you. And I think also, very, very great discussion. So hopefully see you soon again. And
well, good. I'm going to be contacting you. I'm going to try and get someone from Austrian AW, the Australian tech environment, on and talk about what's going on there. Thank you so much.
Thank you, Steve. Bye.
Bye-bye. Interesting guy. Really interesting marketplace right now. And so much happening. There's, as I said, I know we're not supposed to ever admit that we're don't know everything that's going on, but I didn't even understand about this marketplace. Really only started since 2018. I met one of the CEOs from another company, and they were in Austin, and they were going gangbusters. And so this kind of movement to bootstrap your own company and drive responsible growth, and then don't even give up part of the company. Go build your company using future, promissory notes against revenues. It really, talk about to your team. You're like, hey, we get to keep everything if we can keep our churn rate down, and we keep hiring customers. We can keep everything. We could all go retire to Bali, and then go do projects. Listen, again, our hours are changing. So next week on December 6th, we'll be on at 6 p.m. We are going to have Rune Thiel. I'm really excited about this. This is part of our Impact series that we do. And so he's going to be talking to us about entrepreneurship and sustainability. This is one of the things that excites me most about our industry, is that while it started in Silicon Valley, the Bay Area, these values, how we think, culture has spread around the world. I've seen this with Indian people, Australian people, all these different people of different backgrounds, but they all think the same. Race, religion, sex, it doesn't matter. They all think the same, and I think that our world needs more of this. And I guess it's kind of why I think that, like the Olympics, this should be used to federate people. I'm going to reserve judgment on what happened at Slush recently. They had an award winner who was from who wasn't favored, and they pulled the award. Not sure that was a good idea, but I don't know. I'm not an expert to say anything more than that. I just wish that we could. In any case, thank you very much. Rune Thiel on entrepreneurship and sustainability on December 6th at 6 p.m. This is really all I got for you today. Oh, tonight, I'm going to be talking with, I'm going to do a webinar with Upflowy. Really looking forward to this. And so if you have a chance, please come on. It's going to be at 9 p.m. Central Eastern Time. It's 3 growth wins with Upflowy. And should be a lot of fun. Thank you very much, and we'll see you next time, December 6th at 6 p.m.